let's see what juicy bullishness Ron Barron has to say for us regarding Tesla.
Let's talk
today
about Tesla as we always do, but then I want to sort of broaden it out and talk about the markets and some of the other companies that you're invested in. There was an analyst call just yesterday, this is HSBC, which really initiated coverage. They said that their price target was $146. I assume you probably looked at this and probably laughed given your very bullish views on Tesla. But what was so interesting about the report was that they really were trying to define the company as an EV automobile maker. Is that the way you think about this company?
I think about it as a technology company that's providing services to their own company and to others. They can't possibly be matched by anyone else. They have data, technology. They make cars cheaper than anyone else. When Ford makes one of these cars.
Remember that Ron Barron is the person who thinks of Tesla as Intel inside. Remember back in the days of Intel Pentium inside or Intel Centrino inside? That was the big selling pitch. Think of Tesla FSD inside. That's his long-term bull thesis, although while that'd be cool, we haven't really started licensing FSD yet. Is that actually going to end up being functional? We'll see. Here we go.
An electric car. Every car they make, they lose $36,000 on. $36,000 per car. Our company now makes about $8,000 or $9,000 in profit a car. They were making $15,000 in profit a car. But if they build a plant that costs $7 billion for 1 million cars, that plant was making $15 million a year, $15 billion a year on a $7 billion investment. $15 billion on a $7 billion investment. An ordinary industrial company would make 15% on capital, 20% the most. This guy's making his capital twice a year. Now he's making it once a year. He's making $8 billion in a $7 billion plant. So he's the lowest cost person. Everything about the business is trying to drive prices lower.
That was a great reference there. This reference to, hey, look, even though he used to make twice his money on a factory, now he's making once his money per year on a factory. That's a very interesting point of view. $15,000 profit per vehicle. What he's doing is he's multiplying that by about 1 million per factory to give some rough numbers here. Even though some of them cap out at about 750, he's giving rough approximations. Not a bad way to look at it. If somebody came to you and said, build this factory for $7 billion, here's some money from the government as well, and here's a loan. Next year, it'll make 8. The year after that, it'll make 9. The year after that, it'll make 9 again. Then it'll make 9 again. Then maybe it'll make 10. You're kind of going to do that all day long. I like this analogy.
Right now, they will be in the 1900s, early 1900s, the automobile companies were tremendous innovators. No longer is the case. In the 1950s, they decided they were going to go for profitability, and they outsourced all of their supply chain to their detriment. And all these companies went bankrupt. Hundreds of them went bankrupt. And now the way we're going is that their electric cars, they drive, I guess they have about 30 miles a day, 30 or 40 miles a day, and they have 3 million of them that are collecting data. 100 million miles a day they're getting for data, and then they're also getting compute that they're going to have more compute than anyone in the world in 18 months to train it.
Have you been surprised, and this is true of the other EV makers, a lot of EV makers have put up big goals in terms of sales, and then they've scaled those goals back, saying there's just not the customer demand. Do you think that is the responsibility or a function of the products that these other automakers are putting out? Or do you think that there actually isn't the demand for EVs writ large that maybe was anticipated or expected?
My personal opinion quickly there is I think it's both. It's a combination of, okay, wait a minute, this is pricey for an EV when you go to Ford and some of the other EVs, and they're not on the Tesla charging network, so you have a frustrating it's tough to sell people on using these non-Tesla charging network cars. Now, a lot of the manufacturers are adopting Tesla chargers, but that doesn't happen overnight. That's going to take probably a couple years, and then is that only going to be newer models? So in other words, somebody who's stuck with a Ford EV now, are they not able to adapt to Tesla charging standard? Maybe. Let's assume they get an adapter. But the point is, if we're not at that point yet, and it still takes a year, then again, it's a higher barrier of entry for these non-Tesla supercharging EVs, despite the fact that agreements have been made to get people into these Tesla EV chargers. Now, the second thing is, well, pricing and affordability. Tesla's just a better deal. And you've got companies that struggle actually making a profit, making electric vehicles outside of Tesla. Nobody else in America is making a profit. You have to go to China and see like BYD for people making profits.
There's 1.5 billion cars that have to get replaced. They do about 80 million cars a year, and a small percentage of those, 10%, are electric right now. Ultimately, it's going to be all electric. But the reason there's not more demand is the cars that are out there are not very attractive by the dealers, by the car companies, and they're expensive, number two. And then in addition to that, the dealers who sell them, they don't want to sell them because there's nothing to service. The dealers make all their money on servicing. So dealers sell them, they're not selling them.
Talked about trying to bring prices down, and that's something that Elon Musk has talked a lot about. At the same time that he's going to try to bring prices down, you have the potential for Tesla to become a target of the UAW, which of course just made this new deal with the other big automaker.
That's a big fear that people have. And keep in mind, Tesla's valuation right now, it's trading for about a 2.5 peg based on Wall Street's estimates. Wall Street's only estimating 27% EPS growth over the next few years for Tesla. I think that's well understated. That should be closer to 35%, bringing their peg roughly in line with NVIDIA's valuation right now. The problem, though, is you do have this fear that, oh no, unionization is just going to kill Tesla profits. Oh no, we're screwed.
At meaningfully higher prices in terms of what those employees are going to be getting. What do you think about that?
I think Tesla's employees are the highest paid workers in the world as far as the automobile companies go, because they own stock.
As a function of the stock.
And that stock option would not be present in all instances if it were a unionized company. When the unions were in control of Fremont, as soon as they had trouble, they ran from it. Tesla took over that plant in Fremont after the unions had left, after the company had gone bankrupt. Tesla employees, there's a good story that one of the executives and then I want to talk about it.
Of course.
One of the executives who devised the pay plan for the employees was telling me that he's a small Jewish guy like me, and he was walking through a plant, and a large black man walks over to him, shaved head, tattoos all over the place, and says, Ira, are you the man who devised the pay plan for us? And he said, yes. He said, I want you to know that I'm the first man in my family, the first person in my family to ever be able to afford a home. And thank you very much. And so the workers there make more than anyone else by far, and their health care, all the benefits are better. The unions have been trying to organize Tesla, Toyota, all the foreign companies for years. They failed repeatedly. Why? Because those companies are not, the union's not in business to keep the employees. They're in unions to have the power.
Before we move off Tesla, just for
by the way, the stock went down yesterday, not because of that report.
Okay, what do you think it is?
Because of Joe Biden, President Biden, who, by the way, I love what he's doing for Israel, but I don't like that much what he's doing in business. Some things I like. But he's the one who said unions should organize Tesla. That's what happened yesterday when the stock went down.
Okay, we'll come back to the Biden piece in just a second. Melissa Lee, I think, has a quick Tesla question because I know I want to talk to you about a whole bunch of other things. Melissa?
Yeah, Ron, thanks for taking my question. When you think about China, how do you think about the growth there? Because that's a key piece to the Tesla story. Li Auto reported its earnings yesterday and had strong EV guidance. It's gaining market share. I'm just wondering how you think about the competition, but also the weakening Chinese consumer. And have you discounted that portion of the Tesla story at all, given the Chinese economic forecasts out there?
Tesla right now is doing about 1.8 million cars a year. When we started investing in the company 7 years ago, when we invested between 2014 and 2016, they were doing 41,000 cars a year. So 41,000 cars a year to 1.8 million, they're on their way to 20 million cars. China is about 1 million right now of their 2.8 million, but a large percentage of what they make in China is exported from China to Europe. And the more they build in Europe, of course, the more they're going to save on transportation costs and duties. The idea is that China invited Musk in, and invited him in because the Chinese car companies have done very poorly for a long time. And the promise was that he's going to help them become better car manufacturers, and he's not trying to take over the market in China, better car manufacturers and develop a local supply chain. And so he was the only one that's ever been invited into China that's been able to not have a partner, a local partner, to operate their business. So I'm convinced that they have good operations in China. The person who runs their Chinese business, the Tesla business in Austin, in fact, is probably in line to be an important person at Tesla overall. He's Chinese, and he was brought from China to Texas, and runs the business there. He's going to be in charge of all the automobile business. So I think the relations they have with China are exceptionally good. They're both people are getting something from it. And I think that business will continue to grow, but he's going to open plants all around the world for low-cost cars. And wait till you see what's going to happen when all of a sudden they start selling cars instead of for $40,000 a piece, for $25,000 a piece, which is going to happen in about a year and a half from their new model. The new model, they think, is going to do 5 million cars a year. 5 million cars a year for the Model 2. That's coming.
Couldn't agree more. First, really important to remember that China is exporting deflation right now. Their PPI read year over year came in at negative 2.6%. That's really low. Anything you're manufacturing in China right now is getting cheaper. Lithium down, copper down, iron down, steel down, commodity prices down. You've got across the board deflation occurring in China right now. It's a problem for China because they're heavily indebted. Deflation hurts a debtor country. We think we have a debt problem here. Look at the disaster that's happening in the Chinese economy with their real estate debt bubble that has absolutely been propped up for China's version of 2008, basically. It's crushing everybody's net worth over in China, especially since a lot of net worth is based on people's real estate ownership in China. Now, what else? CPI is negative. Even consumer prices are negative. Now, albeit only 0.2% in China, China is exporting deflation to America. This makes it cheaper to manufacture cars. That's a margin tailwind for Tesla. It's just going to take time for that to catch up. As far as not having a local partner in China, what he means is the government. Usually the government owns part of your business, potentially up to 50% of your business when you operate and get licensed to do business in China. That is not the case here because Ron Barron's 100% right. Establish the supply chain. And other countries around the world will look to Tesla and say, hey, can you do what you did in China in our country? That's why all the leaders open up their arms to Elon. They're like, please bring us 20 to 50,000 jobs, please, because you're going to make wherever you build that factory a completely functional city. 50,000 people, let's say, working at a factory, that's a city that you've created solely out of people working at the plant. That's amazing. Ron Barron's 100% right, especially when you get to a lower cost car. The pain of Tesla stock right now is entirely explainable by interest rates. That's it. And if you believe that interest rates are going to trend down over the next decade, then potentially this is your opportunity to invest in Tesla stock. My take, I obviously have a bullish position in Tesla stock. This is not personalized financial advice for you. Good luck, and I completely agree with Ron Barron. I cannot wait for the Tesla inside, by the way. Can't wait for them to start saying, hey, here, pay us $5,000 for any car you make, and we'll put FSD in it. At least the autopilot. Like, the Tesla autopilot is already 10x as good as any other driving support system that exists. Hands down.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.